Trend breaks often precede major moves in the opposite direction, as you can see in these examples. But more often than not, trend breaks offer false hope for people looking to go against the prevailing trend. While these failures might be frustrating for some, trend followers can still use these short-term deviations to their advantage and trade in the direction of the prior trend. Hello, I'm Fawad Razaqzada, market analyst with Think Markets, and this video is part of our series on trading the failure of reversal patterns. Now, in the previous videos, we have already discussed the failure of typical chart patterns as well as candle shapes such as the hammer. Using the same logic in this video, I will show you how to spot and trade the failure of trend lines. Now, when a genuine break of a trend takes place, this typically suggests that the buying momentum has ended and price wants to push lower. So what you want to see is for price to make a distinct lower low as the sellers replace buyers in controlling price action. However, if price refuses to break the most recent low despite the trend break and then instead goes back above the broken trend line, then that is when the sellers could get in trouble, as the lack of downside follow through below the broken trend line suggests that demand for the underlying asset is still strong and that it is not the right time for the trend to turn bearish. Now then, the beauty of trading the failure of a broken trend line is this. First, you're trading within the existing direction of the larger trend, in this case an uptrend, which means you are automatically giving yourself a better chance of making a successful trade than when going against the trend. Secondly, and perhaps more importantly, when a broken trend is reclaimed, this can lead to a sharp continuation higher. The interim false signal, that is the trend break, encourages many people to go short, thinking that the top might be in. But when price refuses to go down and the shorts are forced to exit their trades, this can lead to a sharp rally as trapped traders scramble to buy back their position at progressively higher levels. This can therefore lead to a quick rebound. The failure of trend breaks can sometimes be anticipated. Firstly, trend break failures are more common inside higher time frame and rising markets than in downtrends. In strong bullish trends, you will get lots of false signals, but most of the time they fail. It is also important to look at correlating markets. For example, silver may have broken its bullish trend line, but gold is breaking out to new multi-month highs. In this case, the breakdown in silver may prove to be a bear trap, since both metals typically go in the same direction. So always look at correlating markets when anticipating a trend break failure. Another way to anticipate a false break is by studying price action. How price behaves after the trend is broken gives good clues about what might happen next. For example, if price refuses to show immediate bearish characteristics despite the trend break, then you can expect a potential short to squeeze rally instead. In this case, you can look to go long if a certain resistance level breaks, for example. Obviously, trend failures can happen in both directions, and this is how a trend failure in a downward trend would look like. But the idea is the same, as in both cases, we are looking to trade the trapped trader. Now, when it comes to trading the trend break failures, the stop loss needs to be somewhere just below the low of the failed breakdown attempt for a bullish trade. For if price were to revisit that level again, then it is most likely to be a genuine breakdown. With a tightish stop loss, the potential reward could be considerably larger if the trade is taken at decent levels, which is something I will discuss further as we now move over to the charts to share one or two examples. The Russell is a really good example to illustrate what we have so far discussed. The index had been in a very strong uptrend since March 2020 as it powered to new record highs. Here, it briefly broke the trend line, but notice that it didn't follow through to take out the prior low. Instead, it formed a bullish engulfing candle on the very next day before surging to new highs. In this example, you could have gone long on the next session, placing your stop below the low of the engulfing candle, and your target could have been somewhere above the recent highs where trapped sellers' stop loss orders would have been resting. Notice that after forming that false signal, how fast the index reached out to new highs as the shorts were squeezed viciously. Now, the euro-dollar daily chart here is not a perfect example of what we have so far discussed, but again, it shows the same logic. Here, once the trend broke, price held below the trend for a couple of days, forming a double bottom here. Then it went on to reclaim the broken trend line before eventually rising to a new high. You could have traded this several days after when the trend line was reclaimed. For example, right here, once it made this interim higher high, placing your stop loss below the double bottom low, and your target could have been somewhere above the recent high, for example, the 161.8% Fibonacci extension level. Now let's go back to the slides to talk about a couple of important points. Trading the failure of trend breaks is an alternative way to engage with the markets than relying on traditional way of going about the business. This way of trading is often overlooked by analysts and newer traders, but can provide strong follow-through, especially when used in the direction of the prevailing trend. This way of trading often provides you with a strong idea where price is heading to, in most cases, above or below levels where trapped traders' stop-loss orders would be resting. However, it does require some thinking outside the box, and in this series my aim is to get that across to hopefully pass on some of the knowledge I have acquired over the years. If you found this video useful, please like and share, as this will encourage us to provide more content like this. And if you haven't already done so, please make sure you subscribe to our YouTube channel. See you on the next video.